Hello.
Hi.
And hello, everyone here. So I guess we represent TradFi, traditional, but perhaps quite important area of the world. So first of all, could I ask you just to introduce yourselves? Because they might be confused by the alignment of the pictures and the people, but please, go ahead.
We look different, right?
Thank you. So I'm on that side in case, it's confusing. Anyway, I'm also from Visa, so very close colleague with Modi, who you just heard from the panel. I lead our global effort for CBDC and tokenization on the product side, so lots of exciting things that we're doing there, so yeah.
Kevin Fairley. In 2015, I built a company that mitigated default risk using various types of machine learning. That company was growing rapidly. Franklin Templeton came in and bought 100% of it. And I got to know Jenny Johnson, our CEO, quite well. And after integrating that company and that philosophy within their global complex of 1.6 trillion of AUM, I noticed the opportunity that Avery and the group before you were speaking about. And I noticed that there was sincere white space at Franklin Templeton. No one wanted to rock the boat. No one wanted to seed these founders. And so I've invested in over 50 companies on behalf of Franklin Templeton. I am the managing director in GP for Franklin Templeton Blockchain Fund 1 and Franklin Templeton Blockchain Fund 2. My lawyers picked the name of the funds. But it's fun because what we cannot build, I know I can support with dollars. And I have very strong opinions in terms of this innovation cycle. So that's why I'm here.
Great. Well, thank you. Just to clarify the sort of terms of the conversation, I guess. So we're going to be talking a lot about different decentralized finance applications or DeFi applications, and also a lot about the technology. So in terms of TradFi, what is interesting about DeFi? Is it the applications on DeFi, or is it the technology, and is that the thing that should be integrated?
I guess there's many layers to that. And I think like very unique to the Visa perspective, we think about everything coming from the payments perspective. And I know majority of you know what Visa does today. So just to summarize, we're in the midst of money flows. Anything that touches money to do with money movement, we're here to figure out how we can facilitate that movement. So as we're looking at the entire space, we actually start from the much more fundamental. What does blockchain represent? What does this piece of technology can do for a payments company like Visa? And this is where the first principle starts, where we're thinking about blockchain more as a future payment rail. And that's very important to think about it that way, right? Because blockchain can be many things. It can be a ledger recorder. It can be value exchange. But when it does come to payments, there's something unique about it. And so we start from that. And so I think there's a lot of interesting technology that we can potentially leverage from the blockchain to think about how to build future payment rails. And then to your point about the DeFi world, I do think that's a very cool innovation that sort of took people by surprise in a way. From decentralization, you're trying to re-tackle the financial problems and trying to see how that can be done. So I think right now, as we're thinking about DeFi, there is a potential interesting community for distribution purpose that, you do have it mass, like an ecosystem built out around DeFi. So how can we tap into that? Because again, everything to do with finance, there is a money flow. And that's where our focus is going to be about. How can we really provide values to different type of users, whether that's traditional type of users or new type of users who are very adept at using crypto as a type of payment. So yeah.
Sure. So at Franklin, we're building and investing in the space. So on the tech side, I think we've tokenized somewhere around $600 million, and it's a tokenized money market fund. And there's future use cases that I can't speak about due to regulation, but I think the pace of that build has been built on the premise that the technology is really important. So we turned a transfer agency into a smart contract. So when you think about the deflationary cost pressure that puts on a legacy transfer agency and legacy infrastructure, it's monumental. And so the next phase is, okay, if we can turn a transfer agency into a smart contract and we can do that in conjunction with the SEC, what else can we do? Can we make this tokenized money market fund more fungible and usable and ubiquitous across the DeFi system, right? And so that's really phase 2 is how do you work hand in hand with the regulatory bodies in different jurisdictions on a global basis, knowing that we've done the work using the base layers, tokenized the legacy product, and we have a lot of use cases on why people do use the product aside from interest rates are at 5% right now. On the DeFi side, I like to invest in what we can't build. And what I mean by that is I invest in things that maybe there would be some commentary from regulatory bodies. I think if you are innovating alongside what regulatory bodies say, you may be seeking evolution, not revolution, and that's a problem, right? Because you're being backed by venture capitalists. And so, I like to fund things that are structured finance products that are normally sitting on legacy derivatives desks like Goldman Sachs and JP Morgan, and then we tokenize those strategies and then we give them to the public, right? And so that's a great example of me giving funds to the founders of that company to break down that barrier between Main Street and Wall Street so Main Street can have access to such a superior product in DeFi land. But I'm not so sure Franklin could go out and offer that product tomorrow. But I'm happy to support it as the venture founder, or as the venture partner.
Wow, okay.
Makes sense?
I'll invest with you.
Okay, cool.
Just sort of tokenization and innovation. One of the biggest innovative tokenized products, one can argue, are stable coins. Mm-hmm. So where are they going? What's going to happen with stable coins?
I mean, that's a great question. I think, and I just, again, for pretext, right? The word tokenization, I guess, is not a new word, although maybe on the blockchain term, this is kind of like emerging more recently. So, we at Visa has been doing tokenization back starting from 2010. So it's a different type of token. It's really representing your underlying credit card information. So as you're looking at your credit card, that 16-digit PAN is really representing a lot of your personal sensitive data. And we're trying to incentivize that and trying to protect the information. So that is a tokenization already. Now, of course, as we're looking at blockchain tokenization, that has a slightly different thing. But I think this underlying technology that is similar in the sense it is token, after all. It's a string of bits of information that represents something underlying. So on the blockchain is representing about the assets and the ownership. And this is where stablecoin comes in, right? Because here we're really looking at the representation of money itself and associate ownership to do with it. Now, stablecoin is not the original. Original is like Bitcoin, Ethereum, and everything. Of course, that's not stable. And from that evolution, we have stablecoins. But again, in the broader context of what we call the evolution of money, and this is where you have now different forms of money emerging, right? So stablecoin is one type. You have CBDC, which is central bank digital currencies. And much more recently, if we are looking at what happens in the past 18 to 24 months, lots of banks are starting to get onto the scene, and this is what Modi referred to, of tokenizing bank liabilities, and this is what you've probably seen, tokenizing of bank deposits and such. So I think stablecoin is lying that whole kind of big spectrum of where the money is evolving. In terms of where it's going, I think previously Jeremy also referenced the fact that at the very beginning, stablecoins, the majority of the use cases in trading, right? It's really the on-chain representation of dollar where that goes. I think personally where I would find very interesting going forward is to look at much more real-world use cases, whether that's, say, on cross-border transactions or remittance flows and such, because this is where, going back to kind of thinking about the payments use cases, after all, as we're looking at blockchain and stablecoin is a way to transact, where are the pain points right now in today's world? And I do think, for example, in cross-border flows, we definitely have a lot because of the existing corresponding banking model certainly is not the most efficient. So we'll have to see. I think that's still going to take time. But that will be in line with all the other parallel development, in my opinion, with respect to how CBDC will go as well as tokenized deposits. You can't think about them in a silo. So yeah.
And just to follow up on that, do you think that stablecoins are going to be consumer-facing, so retail-facing, or is it going to be wholesale? Like a settlement coin?
Yeah. I think right now it is retail facing, right? Because that's the majority of the use cases, and of course institutions are using that. I think to think about wholesale I'm not the expert here, but I do think it has certain regulatory, what is the regulatory status with respect to stablecoin? Because in today, for the wholesale settlement between financial institutions, they settle in central bank reserves. Now, that doesn't need to be CBDC, but they do settle, say, in the Fed facility end of the day. I don't know if stablecoin will reach that status to say in the future, the biggest world financial banks will be using stablecoin. That's a TBD question. So, yeah.
And in terms of your world, what is the value of tokenization? Why is it better than using pieces of paper, for example?
Well, I think we've seen the evolution of digitization and the efficiencies that come out of that, right? And so when you tokenize an instrument and then at the epicenter of that instrument is a smart contract, I think, at least on the money market fund side, like you have programmatically created an instrument that pays dividends automatically, right? So you take out a lot of the human intervention and human interaction. And I think that efficiency that you get from the smart contract that's embedded in the token is the number one go-to reason why I'm a fan of tokenization. I think a lot of early use cases focused on liquidity. If you tokenize something, it becomes liquid. And I think most of us know now that that is a false narrative. You need market depth, you need market makers, and you need global adoption. Crypto is truly global, but I think understanding what we can make more efficient and reduce cost by tokenizing said instrument is something that becomes paramount in the argument.
So who is a smart contract replacing? Let me put it that way.
Oh boy. Well, I don't want to create enemies, but I mean, intermediaries, right? And
Intermediaries.
so I think like there are near-term replacements that we could say bye to tomorrow, and there are long-term replacements that I think are being augmented, and their roles are being slowly revoked or slowly pushed back. I think anyone who is seeking rent, right, in between you and the end customer, and taking a part of that your supply chain and charging you for that. I mean, transfer agencies, if you look at the enterprise value of them, they're massive, right? And I think if you begin to automate a majority of their process and flow, and we know that blockchain is deterministic and AI is probabilistic, and we have tokenization and smart contracts and data with data efficacy because blockchain is deterministic, you really begin to remove all the manual processes and take something as simple as a tokenized treasury fund and automate the entire thing. Daily NAV, dividends, accounting. And so the conversation can get very contentious very quickly. But when the data is as deterministic as blockchain is, I'm willing to take the more aggressive side of that argument.
Automation has come to many different industries. So perhaps this is automation coming to finance or TradFi.
There's a lot of automation coming to TradFi. And to pick up on your, cross-border payments comments and remittances, I would say on the venture side, a lot of my growth, like real revenue growth for young companies that don't have tokens per se, they're just young companies and they're building and they raised a seed round, the revenue growth per employee is phenomenal throughout Latin America, using dollar-backed stables, executing cross-border payments, on-off ramps, B2B2C. And it's quite interesting. There's a lot of rhetoric going on from leaders in traditional financial circles that think the States loves the dollar-backed stables because it's a sneaky way to leak the dollar right into the world, right? And so in a time period when we're fearful of that trade unwinding due to fear of the US dollar, we're also seeing a movement of stables permeating through societies in ways that we previously have not.
So you talked a little bit about liquidity, and obviously you're very interested in issues around money. So let me ask you a very speculative question. If you have a technology that allows safe-for-safe collateral swaps, why do we need a payment rail at all? So just, I mean, usually when we think about any kind of asset, we swap it into dollars and then we buy the next asset. Why can't we just do asset to asset without actually worrying about the payment rail?
That's an interesting question. I think even if it's, and by the way, I've not thought about this, so I'm really thinking on the spot, because what you're describing is a swap trade as opposed to a payment flow from A to B. You still need a rail, because even that, if you're looking at a delivery versus payment or payment versus payment, there still need to be something underlying to facilitate that, right? So as we're looking at how the future type of quote-unquote payments can evolve, that might expand the space. Because right now, as we're looking at payment flows, it's very simple, right? Like you as a buyer, you pay the merchant. That's a one-way flow. What you're describing is a two-way flow. So I don't think that means you don't need payments. It's just different new forms of payment emerging, but underlying you still need the rails. And hence, in the future, as we're thinking about these rails, could that all be coming onto the blockchain? The answer is probably yes, because we're already seeing the experimentation. And again, as I've emphasized that, where does Visa come in? Visa comes in when it comes to the cash leg, because you always will need a cash leg. And this is where potentially we are trying to facilitate that thing to be faster, more available, 24/7, programmable and such.
I would just add that peer-to-peer is a right? So we have the ability to do anything we want peer-to-peer. I think when the IRS comes a knocking and they want to verify, how much money we made or transactions we paid, were these payments for services rendered, I think you have to answer those questions ethically at the end of the year and make your payment on April 15th in the United States. But, the use cases that are arising between this is truly global, right? So 2 weeks ago, I wrote a children's book using AI, and I put it out on the internet, and it was about a 13-year-old pug, and I wrote it for my children, and I raised money globally in a native cryptocurrency that I will not name because I'm an investor, so I don't want to pump it, but people all over the world funded, and I converted it to USDC, and then I sent thousands of dollars to the Pug Rescue of Northern California, and it was all peer-to-peer. It was one wallet to my wallet, and then I offered to use a third party called Breadcrumbs to audit, the money flows to make sure that I wasn't hiding anything. And so the technology is there to do peer-to-peer in anything you want. And I think the only time you get in trouble is when you don't disclose it. I didn't make any money, and I don't have a charitable foundation, but money did flow. And so I'm sure I'll get questions at the end of the year because it was above a certain amount. And so when you think about the ability to set up that wallet, collect money from people all over the world, and send it instantaneously for nothing using a very high throughput chain, I don't know what you need in the middle anymore.
If I can just opine on that, I think there is a very particular point about disintermediation peer-to-peer, which makes sense. But I think there's also other type of payment flows, because the ones that we deal with specifically, Visa is a B2B company, right? Where even though Visa's name is everywhere, it's on your credit card, we're not actually directly dealing with consumers. So it comes back to, as our clients are the global banks around the world, why do they need intermediaries in the first place? There's a lot of coordination games in between. If you're thinking about your JP Morgan and trying to coordinate with the rest of the biggest world banks trying to facilitate whether it's payments or transactions, is not easy. Again, you're the world's biggest bank. There's lots of overhead around that. Yes, blockchain can save part of it, but it's not going to solve for all the things. So, and this is because we're trying to challenge ourselves, like what's our new role in the future? I do agree to a large extent that blockchain will make a lot of the things much more efficient, and especially when it comes to the human element, I think it will make it much more succinct, so to speak. But that does not mean you will not need an intermediary, because intermediary is there to act as a coordinator in between many of the different. So as we're thinking about a lot of the role that Visa can play, is like a hub and spoke, because we make a lot of the things easier for any single entity who can interact with the rest of the world through our network, our network of networks. And that is not a technology thing. It's much more about certain roles that different ecosystem player can add to this,
Multi-sided markets.
Exactly.
It's very, very powerful.
Yeah.
So I guess we talked about big issues. Let's go. Oh, I guess we talked about pugs as well. So, but let's go to a really specific one. So, how is Franklin Templeton focusing its, or how does it see its digital asset future? Let's put it that way.
So it's broken down into, I'd say, 3 pillars, right? So I run the venture pillar. I run 2 funds, seed stage. The second pillar is the tokenization unit. So they've tokenized the money market fund. They've begun to deploy it across various chains. I can't announce which ones yet. And then the third group is Node Ops. I think from my personal perspective, when I came into Franklin, I came in through acquisition, and then I was tasked with, architecting some of this tokenized money market fund business in 2018. And the one thing I'll say about if you're building in the space, I think you should be investing in the space. And if you're investing in the space, I think you should be building in the space. And so one of my very first investments was a company called Curve, which was later bought by PayPal. But the only reason that I found out about Curve is because I was doing due diligence on them for the tokenized money market fund. Mm-hmm. And so I think our future is the digital asset unit, which is a separate unit. I don't know how many employees we have now. We once had 2, and now we have a lot. Right? But where there's this constant feedback loop between those developers that build, those developers that integrate with really high profile projects, whether it's Avery at Aptos, whether it's USDC, and or whether it's another chain. And that group is in constant feedback with our group. I think we chose treasuries because it was the lowest hanging fruit to tokenize, right? And now that we've seen roughly $600 million come into that product, the question is, well, what's next? Like, what can you auto rebalance, like an ETF, right? What can you streamline? And how much can, I don't want to speak for her, but if I was Jenny Johnson, I'd say, okay, if tech is deflationary, how much cost can I reduce out of this place? And how many humans do I have doing jobs that could be replaced by a lot of what we're talking about today? And so we are a very small subset of the $1.6 trillion. Like, that is a fact, but we are slowly creeping up the stack in various forms, looking to tokenize our next asset, right? Fixed income for me it hits very close to home. And so in terms of DeFi, and bringing us back to the topic of this panel in traditional finance, I'm a huge advocate of being a liquidity provider, right? We have a lot of money laying around, and I think anywhere from an 8 to 10% unlevered yield for someone like Franklin Templeton is really, really good. It's a mutual fund company. And so why aren't we a massive liquidity provider? Well, some of the reasons are regulatory. We have to make sure that we have a heat map from Chainalysis on every liquidity pool that we participate in, because if our dollars are commingled with bad dollars, our trust and reputation's done, right? And so we're working through right now a lot of those, what if this happens, what if this happens, and what if this happens, things that I would probably do if I was running my own company that you necessarily can't do because reputation and trust is paramount, at a larger business. Mm-hmm. But we're working through, I think, becoming a bigger liquidity provider for a lot of these DeFi pools, tokenizing more assets, and continuing to invest. Like I said, to quantify, I've only made 50 investments since 2021, but my team has multiplied exponentially, and I'm looking to bring that number way up. Mm-hmm. And so,
blue skies.
Very blue. I'm an optimist. Yeah. So yeah.
And what about Visa? How does Visa view itself, I guess, in this evolving ecosystem? How should we think about it?
I mean, very much echoing your optimism. I think the industry is really at a tipping point. It really represents something, I think, that we haven't seen previously because, and we call this entire movement the tokenization of things, right? Like, to your point, I believe you can tokenize everything. Essentially, it's just bringing all type of different asset classes onto the blockchain. And taking a step back, it's really this evolution of the new financial market infrastructure, right? Because it requires a whole ecosystem to change in order to fully benefit from what blockchain can deliver from these atomicity, 24/7, blah, blah, blah. So in order to do that, I think different parts of this ecosystem has to quote unquote upgrade themselves. And we're seeing that happening right now in real time. And that's really exciting because, when we're tracking exactly when the banks have started to become a lot more active in tokenization, including on asset management side, is actually during this crypto winter, right? When things are not doing so active, but instead the institutions are still taking a great interest on blockchain, and there's something real around it. And hence, from the Visa perspective, again, our clients are the banks, are the financial institutions. We're thinking about the roles that we can play. So going back to, the role that Visa can bring as we're thinking about it, as I said, the role of intermediary, what value can we add to this chain of things? I think there's a lot of things around rules and standards we can play because, again, I think the best rules you have right now out there is something like ERC20. But again, as you're applying that to the regulated world, do we need something more? Do we need some extra features like other panelists have mentioned, things like privacy? Who is going to be providing the interoperability in between these different chains because we have fragmentation in the world? I think all these different problems start to kind of become interesting opportunities for intermediaries like us to hopefully add value to this ecosystem. And hence, we're very bullish thanks to the fact that tokenization of things is definitely happening. So, yeah.
Layer 0 could be a great interoperability play.
Sure.
I'm also an investor, so
Okay.
self-serving, yeah.
There you go. And so can we.
And so just to sort of, as we glide towards the end, tell me something that I should be looking for in 5 or 10 years' time.
Would you like to go first, or do you want me to go first?
I'll have some time to think.
Okay, so one thing I really don't like about DEXs and AMM is the fact that I think we're recreating some of the older problems that already existed where market makers were really taking advantage of retail investors. And so in 5 to 10 years, I would like to see, and I am speaking to some very bright people around the world, the creation of decentralized exchanges and AMMs that are not out to arb retail, but that are actually out to help retail get better pricing in a very transparent market. And I think that's something that will take five years out. But I don't want to pick on publicly traded companies that rip off retail investors today, but there are a lot of them. And it's because there's too much infrastructure in between the actual investor, you and me, and then what happens in between our decision to buy a share of stock and when it actually settles. Mm-hmm. We're paying for everything, for the order flow. It's all getting passed to us. And I think that entire market changes for the retail investor in 5 to 10 years. I like what Uniswap did, and I like what some of these other decentralized exchanges did, but I still think there's an immense amount of arb on the retail investor by traditional market makers that are in that picture, and I don't like it. So I would look for a more streamlined, cost-effective investment experience for the retail user, the retail investor.
Mm-hmm, mm-hmm.
Yeah, I mean, I was thinking about it as you're saying, because I do think the first wave of adoptions are going to start with the institutional, the ones who have the money, who can try out these things. We're not really there yet in terms of mass adoption and retail. I know that's the goal, the common goal across many people in this field, but I think that's where, what does it take us from now to that eventuality, which is hopefully, on the retail, on a mass scale, that people can use it. Because today, if I ask the question, do I want to buy my Starbucks using like USDC? I mean, my genuine answer is no, because I don't need that, because today's the payments ecosystem is pretty efficient. So what does it take in the future? Well, there might be other things that I can't think of right now that make me to that is exciting. I do think that as we're looking at this space and what's missing, I haven't seen and maybe I just haven't looked enough, but like a good product that's really tying the digital identity with payments, because that's absolutely going to be needed. And to a large extent, maybe, to me, I feel like that's underinvested, just because, a great identity product is almost like a utility, because it's not only just the person providing, it's like it can be used by others who can then leverage the identity that you've done it once, and then you can, be used by others. So that area is somehow a very much needed and slightly underdeveloped area, and it would be great to see how that can evolve together with the tokenization, as we've said. And just by the way, tokenization in itself is very new, right? We are just at the beginning, I think, with all the momentum, with all the great enthusiasm, you know, especially we in the midst of doing that, you realize there's so much to it. Again, it's not a technology challenge. It's more about all your existing business logics, things to do with compliance, things to do with KYC. How do you make that entirely on-chain? And that's not an easy question to answer. So there's a lot of work that we need to do. So yeah.
It's exciting, and I think there's a lot for enterprising students to learn and to apply to basically the brave new world. So thank you very much to both of you.
Thank you.